What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, March 25th. Alright guys, so Nvidia stock on Friday finished the day up $28.54 a share. That's a plus 3.12% move. It stayed essentially flat, down a couple points after hours. Listen, as always, in the after hours, take it with a grain of salt because volume is so incredibly low. Stocks get bullied very easily in the after hours. They also pump pretty easily in the after hours. So make sure you take that with a grain of salt, whether it's in your favor or going against your bias. Now, just really quick here, some good scalp opportunities here on Nvidia today. We saw some interesting setups, repeat offender setups. If you're somebody who likes to trade off of moving averages on blue chips, it's not something I'm a huge fan of. I prefer to do that on more human traded stocks, like in-play stocks. I'm alerting those every day in the gold server. You know, just a lot of opportunities on Nvidia here today. If you're a micro scalper in particular, a lot going on here. There. Million different opportunities. And then, of course, if you took this trade, you would have gotten stopped out, but you wouldn't have cared because you'd already won lots in a row. You know, guys, micro scalping, it's a different kind of personality. It takes a little bit of a different kind of human being compared to maybe like a swing trader, just a long-term investor. I think that for most people, if you only want to be a long-term investor, you usually don't end up doing more active trading. Now, long-term investors will, of course, do very well as well. But somebody who goes very to like the lowest time frame possible, someone like me who just, I think, naturally gravitated toward micro scalping. I'm someone who played a lot of video games growing up, but it was always fast-paced games. It was never like free-range open world games. I used computers a lot growing up. I was always into the more like extreme individual sports like wakeboarding, snowboarding. I was a sponsored rider for a couple of years in my late teenage years. And I think just through doing those things, a lot of you probably have done a lot of these things as well. I think I just developed a particular reaction time, or perhaps it was already there and I kind of just nurtured it through trying to get better at these things. And naturally, along with my personality type, I think I just kind of fell into micro scalping as a primary strategy. And I think that if you're somebody who kind of like feels that, like you feel as if you may be similar, a lot of times micro scalpers end up doing kind of a little bit of everything. Obviously, the idea is to micro scalp for a revenue generating opportunity. And that's kind of like your job. And then you feed it into swing trades and longer term investments. And then maybe you launch into bigger position taking because you can only take so big positions, micro scalping with intraday swing trades, things like that. And that's your day job. And you drive that into long-term investments as your wealth building vehicle, the long-term play, right? That's typically how this ends up going because, you know, you can't micro scalp with $100 million. It's just not possible. There's not enough liquidity. But let me know what kind of style you guys are into. I mean, that's what I'm doing every day with the group, but you get me started about trading, I'll talk for an hour. I do it on the main channel all the time. Let's move on here and keep this about Nvidia, starting with our daily ritual, our volume profile analysis here on the 5-minute chart. You can see some of these little pull-in opportunities that, you know, I myself wouldn't have taken. This isn't my style on blue chips. I just find there's not quite enough edge. There's better opportunities. But I'm sure we saw some traders pulling or trading these little pull-ins to like that 9 EMA. But what we're really looking for here is to pull out any hidden bias that isn't obvious by simply looking at the price action. Now, in order to do so, I need to see three things. I need to see obvious changes in the volume profile, okay? I need those to correlate with obvious moves in stock price, and I need the volume to be outside of what is contextual for that time of day. All right, now the moves I'm looking at here on Nvidia, I want to look at this kind of opening drive. Okay, we got a drive, fade, drive. I'm also kind of want to look at this move here. You can see we got another drive, fade, drive. And then the rest of the day we kind of consolidated, so I'm okay with leaving the rest of the day alone. But let's take a look here, starting from left to right. Now listen, context-wise, right? We expect higher volume off the open and then a fade. That's very normal. Here we did get a pop in volume, but it was a little bit mixed. So I'm going to go ahead and call that first move a wash in terms of the volume profile. There's really nothing I can pull out of there of use to us. But what I find really interesting about this next move, you get that drive higher and then a little bit of a fade and then drive higher toward what then turned out to be near intraday highs here today on Nvidia Friday. Now, this was a little bit choppy. You guys know I like to see consecutive volume bars, but we had four. I mean, it was just bizarre. We saw pop, fade in volume, pop, fade in volume, pop, fade in volume, and then pop. And then we really got a fade in volume on that pullback in actual stock price. We hit the 9 EMA, and then we did another drive higher, where we then saw out of context volume yet again. So looking at this, I have to say that there's some, it's not the cleanest bias I've ever seen, not even a little bit, but it's pretty clear that there's some bullish bias once we peel back a layer of that onion. Instead of only looking at price action, now we toss in the volume profile. There's bullish bias in the volume profile, which on an upside move in a stock, believe it or not, that's actually not always the case. All right. Now let's move on and start taking a look at levels. Okay. Psychological self-fulfilling prophecy levels that I'm paying close attention to come Monday. Now, pre-market on Friday morning here, we actually faded beneath that 50 period, which is a big self-fulfilling prophecy psychological level. As soon as the market opened, we drove up higher and never tested it again. Now, we're above both the 200 and the 50 period. Okay. Come Monday, bulls, what I would like to see is a continuation of this aggressive upside nature of the 50 period moving average to help, like I always say, get some feet up underneath the move. I want as many psychological barriers to the downside as close to a higher stock price as possible if I'm a bull. Any downside test of that 50 period, I don't mind what volume we test on as long as we see a hard high volume bounce, right? Bears, ideally for you guys, you would want to see a flattening out of that 50 period and then a hard high volume break to the downside. And if we were to see a retest, you would ideally want that to be on lower volume, below average volume, and then have the confirmation of rejection be on, yet again, above average volume. All right, let's take a look now at the 4-hour chart, and you can see here that we are pulling away from that 50 period here on the 4-hour chart. It was a little bit more in play throughout the week than it is here heading into Monday. We're about 4.65, 4.7% away from that 50 period. Bulls and bears, this one's really simple. Bulls, I would ideally like to see that 50 period get above 900. Just add another barrier to that big psychological level. Okay, just in case of a retest, I'd prefer to have as many barriers, I suppose, as possible. Whereas bears, your goal really is to crack down beneath 9, at least here in the near term. So it's in your best interest to have that 50 period, which is a psychological barrier because everyone's watching the 50 period on the 4-hour chart. You guys want that to stay beneath $900 a share. So it's just not even in the question when we come down, I suppose, if we come down to test 9. Now, the most important chart of all. If you skip one, do not skip the daily. All right, take a look at this. This paints the clearest image that also has the most eyeballs around the world. What's the story on the daily? Once we can figure that out, that's the story that I want to primarily focus on as kind of my main story. Because again, whatever has the most eyeballs, that's self-fulfilling prophecy mentality. That's how I approach markets, at least in the short term. Right? In the long term, fundamentals always take over. But this is primarily a shorter term video. Monday, right? So what's the story? Well, we currently find ourselves between two huge levels, 900 and 1,000. But we're talking about, about 4 or 5% in either direction, 4.5% to the downside and 6%, to the upside to $1,000 a share. So to me, the story has to be the battle of 950. At least that's kind of like the initial story. And then potentially if we see a 3.25% or more day, it becomes the battle of that all-time high. But I'm going to be clear. The all-time high to me is much less relevant than $1,000 a share. 1,000 is the story when we're talking about more midterm, right? 900 or 1,000, that is the story right now. And, when I say midterm in the context of a video for Monday, I mean like a week, a couple of weeks. But we need to look at less psychologically relevant, but still relevant levels, because this is a Monday video. So I'm looking at 950 bulls. I would love to see a reclaim of 950 and maybe use that as kind of a smaller trampoline to push up toward that all-time high. Because we know that 3.25%, that's well within a one-day expectation of Nvidia. So we have to discuss that all-time high. That's kind of a best-case scenario for bulls, right? To maybe utilize 950 to help push us up toward that all-time high. Now, bears, understand, a test of 9, again, is about a 4.5% downside move away, but getting the stock back in the 8s as soon as possible is best-case scenario, at least short-term, for bears, right? Both sides. What are we looking to do really in the short term, given that this is all psychology in the near term? Discourage the other side, encourage our peers, right? That goes for funds, institutions, and retail. Now, implied volatility. If you trade options, this right here is, if you don't know about implied volatility, this is what you very much so need to learn as soon as possible. This is the culprit to so many mistakes trading options. Compared to the last month and a half, we are in the mid to lower range. I would say maybe like the mid-range, okay? Understand, the lower IV goes, the more favorable conditions become for new options buyers to come in and purchase contracts. The higher IV goes, the higher the potential risk of a return to equilibrium. IV crush, right? So understand, implied volatility, IV, that's Vega as far as the Greeks are concerned. All right, my favorite part of the video. Let's take a look here. What was the bias today, Friday, as traders positioned themselves heading into next week, Monday? We had 2.66 million total contracts traded. Of those, 1.54 million were calls and 1.11 million were puts. Okay, however, that short-term delta range, 0 to 20, those are the short-term speculators, those short-term bets. 516,000 calls, 597,000 puts. So we're seeing a call side bias on the overall. In the short-term range, we're seeing a slight put side bias. It's not heavy at all, but it's there. But then, of course, every other delta range, once you start getting closer to at the money and then in the money, you start seeing a very, very heavy call side bias. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.